Hello everyone, welcome to our channel. I am Hema Holeosu, mentor of Shakti Institute of Financial Markets. Happy Independence Day to all of you. So today's topic is about the trading psychology, how the trading psychology is affecting the traders while trading in equity and options. See, every trader has different biases and there is no simple rule that they have to follow this only. So different successful traders have different strategies. We'll see about it. And before we start, please share and subscribe our channel. And we have a website called www.sifminstitute.com, wherein there are different types of stock market courses, recorded courses are there. And due to this independence, there is an Independence Day offer going on. So there is a huge discounts. So you can enroll our courses and become an independent trader instead of depending on the others. And you can be your own boss. Fine. So let's start. So what is trading psychology? Trading psychology or investors psychology refers to the trader's emotional and mental state that which dedicates their trading action. So what happens is usually when the traders start doing trading, the emotions will come in between. So due to that, they will be not able to handle their gains and also the losses. Due to this, they unwind with the losses because of not controlling the emotion. And of course the emotions can't be controlled by anyone, but it can be reduced. Fine. So trading psychology describe how the traders handle generating gains and handling losses. It is essential to understand and develop a sharp mindset along with the knowledge and experience to become a successful trader. See, if you want to become a successful trader, the first and foremost thing is you should have a knowledge. Without knowledge, you cannot trade in the stock market and you cannot survive in the stock market also. Because the knowledge, the time, what you spend for gaining the knowledge will give you the best interest, and it is accepted by worldwide. Because without any knowledge, if you start doing any business, for example, if you start with a kirani shop or some business, if you start and you don't have any knowledge, and if you don't have any knowledge like how to handle with the customers, how to make profit out of it, how to attract the customer, if you don't know that, then you won't be a successful. In the same way, even in stock market, you can be a successful trader only if you have a proper knowledge, because all the charts and everything will work out at 99% it will work out, and 1% it will depend on the overall marketing conditions. Fine. So trading psychology, first thing you have to control your emotions. Fine. So the psychological factors that affect the trader's mindset. So when you are trading, these things will affect your mindset. So what are those things which will affect your mindset are fear, greed, hope, regret and mindset. So these things if you control, then you will become a successful trader. So first thing is, what is fear? See, when you are trading in the stock market, it happens with everyone. Even with me also it happens sometimes. See, you buy particular stock like Tata Steel, you buy in the with the assumption that it will go up today, and you will buy around 100 shares or 1000 shares. What will happen due to some news or something, it will not go up as per your expectation. So what will happen? You will end up with the loss. So this is one fear. And there are some news, bad news will be coming, like recently the war came and COVID was there. During or else recession comes, what will happen is with the fear we sell off all our positions. So this fear you have to control. So if you control, and if you control this fear, then you can refrain from making profit. Fine. So and you have a fear that you will lose the capital. Yes, when you are trading, you will lose some of your capital because there will be some good days and there will be some bad days in market. So you have to control your losses, then automatically your fear will come down. The next thing is the greed. So greed, when you enter into a excess profit, you will come into the greediness. For example, today you made in bank nifty around 2000 rupees profit. Example I'm taking. So if you make 2000 rupees profit, what will happen now? What the trader will do is, okay, today I have gained 2000 rupees. If I enter now one more trade, I'll make again 2000 rupees or 4000 rupees. So total my profit will be around 6000 rupees. Wow, great. So what you do? You will enter with another trade. So this is the greed. When you get 2000 rupees per day, one day if you're getting 2000 rupees, that is more than enough. So just uh, if you get the money on a particular day, just close off your position and off your laptop or phone and do some other work. You see, Rome is not built in a one day. In the same way, you cannot become rich by doing trading in a one day. So you have to wait patience. Patience is very much important in this stock market. So if you have patience, there are many successful trader and investors who have made money like anything. Okay. So the next one is hope. So what is hope? See, hope means every trader thinks that stock market is a gambling. Some of them think that stock market is a gambling. It is not so. See, you are investing your money into a risk. How can it be a gambling? See, if you trade in a proper way, if you have a trading plan, then definitely you will not end up with a loss. So you have to book your losses at the correct time. See, now if you have invested around 1 lakh rupee in the stock market for trading and you have bought some position, if your loss is 1000, your profit should be 2000, so it will match up. In this way you should have some hope in the market, but uh, be practical. Be practical and trade your plan. And the next one is regret. Yes, this happens with everyone. See, regretting in the sense why it happens is like particular stock. If you take yesterday's Tata Elxsi, it was around 9900, 9800, and it went up to 10,300. So what happens is, if you take the trade at the lowest price, then it is good. If you take a trade at the highest point, and if it comes down, then you will you will feel regret. And if you don't trade itself, then you feel very bad. You feel regretting, like, oh, I didn't I missed the chance. This is very bad. See, there will be many chances, the market will give you many chances to make money, but you should never regret that, oh, I didn't enter at this point. No. And sometimes you regret that, oh, this trade didn't work. That also you should not never regret, because you will get big opportunity in the stock market. And there are many people who were behind the bitcoins and all. So they by seeing the other people's success, even they thought that if I invest in bitcoin, then I would have mint money like anything, so I should not miss this opportunity and I will invest in that. So you bought it, and you can see the last month how the bitcoins have come down. So that time you again feel regret, oh, I shouldn't have done this. So you should never regret when you are into the stock market. Do the proper analysis and enter the trade. And the next one is the mindset. See, when you start trading, before you start trading, watch some news in CNBC hours. They'll give you all the idea about the day's market, overall market, how the global markets have worked and how our market will work. So all the knowledge you gain, and then you make a proper trading plan, that whether I should go for a buy call or I should go for a sell call. So depending on that, you have to enter the trade. Because today if the market is coming down, you can go for the sell position, and if the market is going up, you can go for the buy position. So depending on the market scenario, you have to enter the trade, and you have to control your emotions. It cannot be eliminated completely, but you can control your emotions. Like if you get the profit of 2000 rupees or 1000 rupees, then exit, book the profit as and when you can, and try to keep the stop loss. Whenever you buy a trade, if you buy a trade of 1000 quantity of Tata Steel, for example, at 110 rupees, fine, 1000 quantity at 110, you have bought the Tata Steel. So what you do, you should keep the stop loss at 109 or 108.50 paisa, and your profit should be 112 and 114. So if the price is going up, what you can do, you can trail the stop loss. So if you trail the stop loss, you can utilize all the profits to the maximum extent. The prices which is going up, you can make the profit out of that. Okay, so these are some of the psychological factors which affects the mindset of the traders. So if you control these things, then definitely you will be a successful trader. Fine. The next one is how to avoid emotional trading. Yes, you should, you can avoid the emotional trading, as the same thing is there. You have to make a solid trade planning. So before you start, please plan your trade, like how much risk you want to take, how much profit you want to make. So understand the risk appetite. So everyone have their own risk appetite. See, some will be like, if he is a small trader, then he will be making a profit of 200 rupees, and he'll be taking a risk of 100 rupees. So 1:2 ratio, or 2:4 ratio. Depends on how you take the risk. So it depends on the individuals. But then know when you to take a break. See, when you are making consistent loss for 2-3 days, take a break for 2 days, because trading will make your mind strict, and for that you need to take a break for that. So take a break and then again you start, then definitely you will make a profit. You understand why you have making a loss, which strategy if I use, I'll be making profit. See, there are different types of strategies in stock market. One is 15-minute streak is there, Bollinger Band is there, moving average is there, WAP is there. So there are many strategies used by many successful traders, but which trading strategy will be suitable for you, that you have to judge. So those trading strategies and all will be taught in our courses. So our courses will be very helpful for you to make to be a successful trader, and earn money out of it. Right? So the next is how to improve your trading psychology. First, get yourself in the right mindset. As I've told, you should make a proper analysis, and then you have to enter the trade, and how much loss, how much profit, you have to keep it in your mindset. Have a great knowledge base. So without any knowledge, if you enter into the stock market, then you will end up with losses. That is 101% sure. Then remind yourself that you are trading in a real money. See, there is a virtual trading also. So before you start into the real money, you can do the virtual trading also. After you get the practice, then you can enter into the real money. So when you are entered into the real money and trading in the real money, you should be very caution, like when to put the stop loss, how much stop loss has to be put, how much profit I have to exit. So you have to plan everything and keep it ready in your mindset, and observe the habits of successful traders. So you see the many successful traders what they do, but don't follow what they do. You learn from them and you start your own strategies, because there are hell lot of strategies. You should follow your own strategies. Only one strategy, if you follow it for a consistent for many days, then you will be successful in it. Like some will be there, like they'll start with 15 minutes trick, and if 2-3 losses happens, then again they will jump to moving averages, and after that again they'll make some money, and again they'll come become the loss will come, again they'll shift to super trend, and again back to Bollinger Band. So they start mingling up. Don't do that. Follow only one rule and you will be successful in that. And practice, practice, practice. See, you cannot trade without any practice. You need practice for that. Start with a small quantity, like 1 quantity, 10 quantity, 20 quantity, then you can go for 100, 200. And if you're going for an option, then you can, or bank nifty or nifty options, then you can go, start with one lot, then 2, 4, 10, then you can increase your lots as and when you become more when your hand is in the good hands, then you will become a successful trader. So after practice only, you have to increase your lot size. So these are some of the trading psychologies which you have to improve. And the final thoughts is, be disciplined, be flexible, never stop learning. So in this stock market, how much you learn, that is less only. So keep learning, as you have seen that Warren Buffett reads full day. And by reading only, he had gained so much knowledge that now he is a millionaire. His only work is to read. Fine. So read and gain the knowledge and then start trading, and be flexible. Like don't be too stringent, like if I get this much only I'll exit. No, never do that. Be flexible and put the stop losses as and when it is required, and you can trail the stop losses also, and be disciplined. Don't just blindly buy and sell the shares by seeing others. You do analysis of your own and start trading. Fine. So these are some of the trading psychologies which you have to follow to be a successful trading. So happy trading, and this is our website www.sifminstitute.com. So here you can enroll our courses which give you a very good knowledge of for trading as well as for investment. For any guidance, you can call us to this number 9686199524. Thank you very much. Happy Independence Day.